Hi, Ken. So I just have a question out of my curiosity. I just want to know, what do buy down rate offers mean?
What do buy rates offer? That's a great question, Jerome. There's two types of buy down offers. One is short-term buy down offers, and the second is long-term buy down offers. So, take for an example, you're going for a 30-year mortgage. Well, a short-term buy down, you could do a 1-1, a 1-2, and possibly a 1-3. What a 1-1 is you're buying down the interest rate by 1% for 1 year. A 1-2 is you're buying down the interest rate in the first year by 2%, and in the second year, then the buy down drops down to 1%. In the third year, you go back to your regular interest rate. And a 1-3 is 3 years where you buy the interest rate down 3% in the first year, 2% in the second year, 1% in the third year, and then the fourth year it goes back to the regular interest rate. There are also long-term buy downs. So if you have a 30-year mortgage, say you qualify for a 6% interest rate, if you bought that down 1 point, that would take you down to a 5% mortgage rate for the life of your 30-year loan. Does that help? Does that answer your question? Or
Yeah. Okay. So basically, these buy down rates are for to help the new owners of a house.
yes, it's affordability. It's what you're doing is when you buy down your mortgage rate, you're paying interest in advance, basically. And what you're doing is, so if you had the 6% mortgage rate, your payment would be here. And if you buy it down to a 5% mortgage rate, your payment comes down here. And sometimes people find it just more comfortable to be in this lower payment.
I see. So based on your experience, who typically pays for this buy down rate?
Typically, you have both the buyer and or the seller paying for the buy down rates. Normally on short-term buy down rates, they're being offered by the seller as a incentive for the person to come look and purchase the home. But depending on who is offering the mortgage and who your loan person is, short term can be paid by the buyer or the seller, and also long term can be paid by the buyer or the seller. Normally, with a long term one, it would be credited at time of closing as a extra credit amount for a long term.
I see. So then, what happens after the buy down period ends? Will the payments jump suddenly?
So on a long-term buy down, so if you have a long-term, if you have a 30-year mortgage, it stays at the lower mortgage rate for the entire life of the loan. For the short-term incentives, after the short-term expires, yes, it goes up. So if you have a 1% decrease for 1 year, you pay the lesser amount for 1 year, and then at the end of that year, your mortgage rate would go up to the regular rate that you qualify for. If you have a 2 year, then it would go up after the end of 2 years to the regular rate, and 3 years would go up at the end of the third year. The 2 and 3 years do go up a percentage point each year. So at the end of it, you're not shocked. It slowly goes up.
Basically, people will be informed as well if they will jump into that offers, right? They will know about it early on.
Absolutely. Normally, when somebody's doing a short-term buy down, what they're also looking at, they're watching it, and the mortgage, they have their mortgage person also watching the rates, because what the goal is normally if you're looking at a short term, you're thinking that rates are going to come down. So while you're doing the short term buy down, you're watching rates to come down. So when the rate comes down to where you want it to be for your 30-year long mortgage, you go ahead and refinance and lock that in at the lower rate when it hits that.
Awesome. Okay. That sounds good. So if are buy down offers available on all types of loans or only certain programs here in Houston?
Uh, for the most part, the buy downs are available on most loans. It all depends on the mortgage company. It changes by company what's available.
All right, so there's no standard. It depends on what kind of offer the mortgage companies can give.
Right. So
Nice.
you'd be best talking to your professional loan person that you're working with, and they can tell you what options are available.
That's great. So, and then from a seller's perspective, how can offering a buy down make their listing more attractive in today's market?
Using buy downs to make the listing more attractive is okay. So maybe your house is priced very competitively, as it should be for the market, um, but you wanted to move more quickly. Well, by offering a short-term buy down, it isn't as costly as doing a long-term buy down, but what it does is it helps the buyer get into the home for a lesser monthly payment for the short term. Normally, for buyers, the most expensive year of purchasing a house is the first year. So you're putting in blinds, you're doing decorating, you're doing updating, you're doing all these things that you want to do to make the home yours. So that's normally the most expensive year. So to have a lower payment for the first couple of years is very helpful in taking on those additional expenses.
Definitely right. It makes sense to me if I am the seller. But what if I am the buyer? You said that earlier buyers could avail, buy down offers when they're purchasing a house. So how would it benefit them? Sellers are offering it as an incentive for the buyers, but if the buyers are the ones who will be doing it, how would it help with my costing?
Here's the way I look at it, and different buyers are, of course, in different positions. But a lot of buyers right now, price of homes have gone up. So you're, as a buyer, you're looking at having to come up with a down payment. You're looking to come up with closing costs. You're having a lot of expenses come out. So all of a sudden, to be able to do a interest rate buy down, that's another expense for you on the buyer side when you've already got a lot of money coming out of your pocket.
Mhm.
Whereas when the seller offers that, that's a win-win for both, because for the seller, it makes their home more attractive and easier to get into, and for the buyer, it makes the home more affordable to get into by being able to not have to have additional upfront costs in the home purchase.
So basically, if you are the real estate agent of the buyer, you wouldn't really recommend to suggest your buyer to avail a buy down rate offer.
Yes, the depending on the position of the buyers, and of course, if it's a cash buyer, I would absolutely go with telling them that cash is the best way and not having a mortgage at all. But if you're going the way of a mortgage and you are cost conscious, being able to get that buy down is very helpful. Particularly the short-term buy downs, the way I'm looking at them right now is I keep listening to the analysts. Analysts are predicting that these mortgage rates will come down probably within the next year. So if you get a short-term buy down, well, you're getting the lower interest rate mortgage rate now, so your costs are less. And then if you can refinance within that time frame, your costs may never go up. They could, of course, but they may never go up because you refinance to the lower rate prior to the incentive going away.
All right, I think I have all the questions about buy down rates cleared in my mind right now. Thank you so much, Ken, for providing all these answers, and I'm looking forward to have to have this kind of conversations in the future as well. It was very informative, it was very helpful, and I hope our viewers will get so much of value from you as well on this interview. Thank you so much for your time.
Thank you, Jerome.